Hi, this is Tim Kelly from Breakthrough Insurance Group and the Simplicity Group, and thank you for watching The Big Idea. I wanted to talk to you today about a particular product that is very relevant because of the recent market volatility, and that would be the Oceanview TopSider fixed indexed annuity, which is being exclusively distributed by the Simplicity Group. The differentiator in this product is called the gain control option. Now, first, before we get into the specifics of how the gain control option works, I wanted to talk to you about a shocking statistic that I recently learned. Since 1948, the S&P 500 has shown a robust recovery pattern. So since 1948, that's about 75 years of data that we have. That's pretty significant. Now, following 16 market downturns, so over that 75 years, the S&P 500 has had 16 downturns. Now, after one of those downturns, growth resumed for at least 2 consecutive years, 94% of the time. Think about that for a second. After a downturn, we have seen growth resume 2 or more years in a row, 94% of the time. That's a significant trend. And furthermore, it extended to 3 or more years, 67% of the time. So again, after a downturn, the S&P 500 has gone back up 3 years or more in a row, 67% of the time. Again, a significant trend that we should be paying attention to. Now, the TopSider fixed indexed annuity has been designed specifically to help capitalize on market cycles to enhance your upside potential. So this product was built specifically for times like these when we see volatility in the market. So let's talk a little bit about that, about how this gain control option works and how we can do that. So in this flexibility section, your client has some choices, and it allows them to use 50 or 75% of their current year's earnings to buy up or increase their participation rate in the upcoming year. So as an easy example, let's say in the current year, your client earns 10%, and you and your client get together and talk about how you think the markets are going to look in the upcoming year. And you decide that you believe, based on historical market trends, that the market will go up next year. You're guessing, obviously. But based on trends, you feel pretty good about that possibility. So you're going to take 75% as an example of that 10% earnings and use that to buy up your upcoming year's participation rate. So if you've got 10% currently, you use 7.5% of that, or 75%. So you keep 2.5% of earnings in the current year. You use 7.5% to buy up the participation rate in the next year. Now, currently in this product, the participation rate sits at 100%. So if you use 7.5% to buy that up, it's going to be based on current market conditions, but that you may be able to buy up that participation rate to a maximum of 300%. So that participation rate can go up to a maximum of 300% currently in this product. So that's a very high participation rate that will allow you potentially to take advantage of market trends that we've seen historically. So that's the basics of the product. If you're interested in learning more, maybe looking at some hypotheticals to see exactly how this might look in more detail, please feel free to reach out and contact us, and we'd be more than happy to walk you through that. So thank you for watching the big idea.